Let's take a look at some charts on Uni for Brave New Coin. So Uniswap is a decentralized exchange, one of the oldest, one of the more robust, holds most of the volume across the DEX ecosystem. We can see how the liquidity has grown. It uses an AMM model where you put up 50% of each pair. If it's ETH USDC or USDC USDT, you put up 50% of that. You collect a certain percentage of the fees. So it's a revenue sharing model. There's some impermanent loss there. They pay you back in Uniswap, attempt to bridge that gap. And all in all, this is pretty much an established model at this point that's been used for all the other DEXs, Uni, Sushi, the matcha stuff, the 1-inch stuff, the aggregators. All this is pretty common. Balancer uses different percentages. Curve uses slightly different percentages, but it's collectively the same type of model where the Uniswap coin is used for governance, whatever that means, when in reality it's treated as a security effectively for the health or success of the exchange itself. No one's going to say that out loud legally, but that is how it is traded. Just BNB is a perfect example of that. BNB has more utility than most coins ever will, in that it is used for centralized exchange fees or decentralized exchange fees in their case. But at the end of the day, it is a proxy for the exchange itself. And these Uniswap, Sushi, 1-inch, all these tokens, it says they're governance tokens, but the reality is they're viewed as a valuation of the exchange itself. Whether or not that's right or wrong, that's my viewpoint of it anyway. So liquidity is rising, bullish, right? More people are coming to DeFi every day. Volume is crushing it, has been crushing it. The big thing with DeFi that I keep mentioning in all these videos is ETH fees. ETH fees need to come down in order for people to continue to use this stuff. Just because if they don't, it just prices people out of the market. They go elsewhere. They go to a different chain. They go to PancakeSwap. They go to EOS, whatever. People go elsewhere looking to trade on the DEX casino. If you look at the pairs and liquidity, you can see that sorting by liquidity, many of these pairs have over 100 million, some over 200 million in liquidity, massive volumes here, relatively small fees in general, but these, accrue. This is just 24 hours, so obviously this accrues over time. It's not exactly a massive liquidity mining model where you're going to get these insane yields. It's more of a modest true yield based on fees, right? So it's not going to outperform these crazy yield farming numbers you're seeing. But compared to legacy markets, these yields are great, right? By several multiples. So, if you want something risk-free, like stablecoin, USDC, USDT, you can get 10% a year on that, right? Risk-free meaning you're going to suffer less impermanent loss if the two assets are non-volatile against one another. Considering both of these are quote-unquote stablecoins, for the most part, both of them are plus or minus a penny in general. So you're going to have less impermanent loss here, and you're pretty much just collecting fees on that. And as a result, the yield is lower, but the risk is lower for impermanent loss. And there's all sorts of game theory as far as how you treat, BTC and ETH. That's obviously a super volatile pair. ETH USD, volatile, et cetera, et cetera, et cetera. Curve functions on the assumption that we're just going to focus on the stablecoin swaps, for example, versus the non-stablecoin crypto to fiat swaps. So all sorts of nuances here, all sorts of ways to dig into this, depending on how far you want to go. People ask, what is DeFi? Well, this is what DeFi is, right? It's not having a middleman controlling the order book, not having a middleman controlling what gets listed, not having a middleman controlling fees, none of that stuff. All this just happens in the code. It happens in an attempted to be a decentralized way, at the very least. If we look at the DEX tracker, the volumes, Uniswap is in pink, so clearly leading market share historically, day over day, week over week. No exchanges really doing the volume that Uni is. Sushi came close on February 23rd, but all in all, Uni is basically 2x what Sushi is as far as volume is concerned. And by month, you can see both the growth of Uni and the dominance of Uni. So this, to me, just says if you want to bet on anything, on the health of anything long term, Uni right now is definitely the leader based on market share, based on volumes. They're also upgrading to version 3 rather soon, and that'll have additional influences on fees, on whether or not this stuff goes to layer 2 and unclogs the main chain, whether or not gas fees as for the whole chain, the ETH chain, go down. This is a bit of a cleaning up of the commons. If, like on BTC, if all these exchanges adopt SegWit and batching, and eventually some of them are adopting Lightning, that puts relief off of layer 1 and allows for more block space to open up for other activities. Fees theoretically go down. So that's the goal here with any of these dexes. They all need to clean up their act. They all need to move to layer 2. They all need to figure out as a collective what's going to be best for the ETH chain, because what's best for ETH is best for them. Like I already said, if fees go up, then it's just lights out for all the dexes. If fees are 1 ETH per transaction, basic transaction, then you're in trouble. Total value locked, you can see where it was. Everything took off in 2020 and took off again in January 2021. And right now we are USD TVL. We are reaccumulating sort of back to all-time highs above 4.5 billion. Uniswap's currently in the top 5 as far as TVL is concerned across all of DeFi land. So up and to the right, that's what you want to see if you're bullish. This is transactions per day and average transaction sizes for the token itself. So the token average transaction sizes have increased both as a function of price increasing as well as ETH fees increasing. You're going to see fewer smaller transactions if ETH fees are high. This was the initial distribution of the token. So if we zoom in a little bit, you can see that transactions hit their effective all-time high on February 2nd, February 1st, somewhere around there, and have declined ever since. So if transactions can continue to increase, this will be bullish for the token. It's likely bullish for the exchange. It's likely because there's more liquidity on the exchange. All this stuff is hand in hand from an on-chain metrics perspective. If we look at NVT, inverse metric of economic utility, and active addresses, you can see again the initial token distribution and sort of where that sits now. So if we zoom in a little bit, I like using the weekly average. NVT is declining, which means price should be more bullish than it is relative to the on-chain activity, on-chain utility. Active addresses hit an all-time high basically when transactions hit an all-time high. That's continued to decline. Not something you want to see if you're generally bullish on things. There's definitely a divergence in price, because if I compare this to price over the same period of time, price is just grinding up, whereas active addresses and transactions are grinding down. So no real alignment here between price and on-chain metrics, and whether or not you want to consider on-chain metrics even valuable for quote-unquote governance tokens, rev share tokens, is up to you, but I think it's always worth looking at. Here's another thing. Uniswap worldwide, Google Trends has declined since early February, mid-February as well, rising again slightly here, projected on the week. So for me, this all matches sort of the expectations, or at least should temper the expectations for price, because we're seeing this upward grind, which on trend looks fine. 5,200 monthly pivots, VPVR, RSI. Trend-wise, this looks great. It consolidated from November to the end of December, took off with everything else after January. A very clear technical response as well, in that this was a multi-week inverted head and shoulders. Not a lot of data for Uni, so you just got to pick some time frame that makes sense. This is the 8-hour. And it's really held above the 50 the entire time on the 8-hour. Again, definitely bearish divergence here on price versus RSI versus on-chain metrics versus Google Trends. All this stuff is just saying price probably is going to cool down more or less than continue to just increase. The momentum is certainly declining on several factors here. So, I like Uni at the 200 at this level, this time frame. So I like it at 20, I like it at 15, I like it at 5. I like it at anywhere down here. So long as you are confident that DEXs will remain a thing, then you should be confident in the long term. We're talking years out. What does Uni look like in 2 to 5 years? Does it still even exist? Right? Like, think of the BNB model. Think of FTT is another one, an equivalent FTX token. I think you have to take a longer term horizon with exchanges that aren't fly by night and are innovating in some way and are here to stay. So if you think that's the case for Uni, I think you're just buying, you're dollar cost averaging any dip below 20, basically. That's how I'd read that. 6-hour cloud for Uni looks bullish on trend, above the cloud, bullish TK cross. Everything looks okay here as far as a long position. For me, there's just too much divergence in the short term for continuation in price. Again, I'd much rather buy this. It hasn't really been below the cloud since last year, December, before that, November. So I'd like to see it test like 15, 20, somewhere around there before I get back in here. Definitely looks a little tired at those levels. Uni BTC potentially setting up for some sort of cup and handle with a 75K to 85K sat target. Trend-wise, it looks fine, but again, I'd rather just buy it on the 200 period moving average. I'd rather buy lows than buy breakout or buy where it's at now. I just want to see this get tested again to make sure there's a market demand for it against BTC, against USD, and against ETH. It's kind of the same thing. This has just a continuous bearish divergence on all of these highs. So when I see this multi-week bearish divergence, I don't really get excited to buy at these levels. Even though trend looks okay, cloud looks okay, I'd much rather dollar cost average in the lows than buy the breakouts for Uni. Unless you're a long-term believer in Uni, in the prospects of Uni. Does this pop up when Uni 3.0 gets released? Maybe, depending on what the fee structure looks like. I don't know. But just based on technicals, based on what we can see on chain, lots of bearish divergences here for momentum. But all in all, volumes are crazy compared to the possibilities of what anyone thought was possible. Collectively 60 billion in volume. And this is when fees were enormously high. So this isn't like wash volume per se. These are legitimate transactions that are happening here on chain. It doesn't really matter what it is. It might be some trash altcoin, but the volume kind of speaks for itself. DEXs are here to stay. I think there's no doubt in anyone's mind. Whether or not they'll remain as prominent remains to be seen based on ETH fees. Continually go back to that, depending on EIP 1559, depending on proof of stake and that transition. There's a lot of ifs here, and they are kind of, the health of Uni and all these DEXs is based on the health of the host chain, really. So I'd continue watching Uni. Definitely interesting. All these DEXs continue to be interesting. All of these tokens continue to be interesting. Let me know in the comments if you're bullish on Uni 3.0, if you're bullish on EIP 1559 for Uni, if you're bullish on proof of stake transition for Uni or any of these decentralized exchanges.